Okay, we're good to go. Uh, okay, we're here with Mr. Dan Patton, our favorite mortgage broker. We're going to have an in-person class on February 19th, starting at 6 to for some networking, but we'll get started with the all the news and updates at around 6:30. And we want to do it in person on purpose because we like Dan. He's good looking, but I want to see everybody in person. Make it a little bit social. We're gonna have some finger foods and maybe a little pizza, something like that. And it's nice to get out and see people rather than be on Zoom all the time. So I'll briefly just introduce what we're gonna talk about, and I'll let Dan kind of give his take on it. Okay, so first things first, we're gonna talk about interest rate strategy for 2026. What's expected to happen for the rest of the year and into next year. Number two, most important, renewals. People are renewing mortgages on their investment properties, on their personal homes. Also, I just went through this myself, all this back and forth. And we want to talk about the strategy there and why it's important. Even with your personal home, if you have a home equity line of credit, it plays into your investment property. So it's important to have this conversation. Those of you with pre-construction condos that are closing, coming up, we definitely need to talk to you and figure out what the best strategy is for closing, for financing, and if you want to keep it all together. We're going to have a big discussion there. And finally, Dan's going to talk about the amazing programs he has for investors currently, purchase plus improvement. If you don't know what that is, if you just come for that part, you're going to take amazing value because it's a program that I used a lot back in the day that hasn't been around. And I'm very happy it's back here. So Dan, take it.
Yeah, I'm looking forward to it. I love the in person. I'm excited to your point, Paul. We're going to talk a little bit about interest rate strategies. Variable fixed rates, where we think interest rates are going to be going. Certainly, the new constructions has been a challenge for a lot of people. If you bought a few years ago and you're running into challenges on closing now, we've got some options for you there. And then, yeah, we have some pretty awesome products, some exciting things, some exclusive products that are available for our clients. You build up, purchase plus improvements, ways to convert your existing properties or future acquisitions into cash flowing and equity appreciating assets. So I'm excited. I can't wait to be there.
Perfect. And just so people understand the gravity of it, in the past, let's say 12 months, how many people have come to you, roughly with pre-construction closings?
Oh,
Are we talking 10, 20, 100?
yeah, we're talking like at least 50 to 100.
Okay, and roughly as a percentage, how many of those are having problems? Like appraisals coming in low, financing difficult. Are we talking 50%, somewhere around there?
Yeah, I'd say more than 50%. If you bought a condo, in 22, 23, and it's coming up for closing, more than likely you're running into problems with the appraisal or the value of the home. So how do we navigate around that? Is there options? What lenders do blanket appraisals and things like that? That's all stuff we'll talk about. But yeah, I mean, it's becoming more prominent now than I think I've ever seen in my 20-year history of mortgages. But yeah, interesting times for sure.
Yeah, so I'm bringing this up on purpose because I seem to run into it on the way further ahead. Like, hey, I have a condo coming up, closing in 6 months. What do I do? Or I get a call after closing, like, oh, I'm losing $1,200 a month, and I'm like, well, we're out of options here. Right. So
Yeah.
I want to talk to you about this now and get prepared because even if we're not going to close on it, there's ways to make this all work better, and I don't want to get into that here. And then on the purchase plus improvement side, briefly, if you don't know what that is, uh, let's say I want to buy a property and I want to improve it, but I don't have the money for that right away. And a typical improvement that you might understand very quickly is, let's say I want to make a basement apartment, a legal basement apartment. I might buy a house. I want to build a second unit and bump that cash flow massively. I'm like, I don't have an extra 100, 150 grand. Well, Dan has a program that can lend you the money based on the future value of that renovation. That is purchase plus improvement. Okay. You really need to understand this part. I promise you, I'm going to make you smile, or at least Dan will make you smile during that part. So I want to see in person, at least shake hands, stay for some food, stay for the good action. Anything else you want to add, Dan?
No, that's it. I mean, purchase plus improvements is a little. They're in the same realm. The program we're going to talk about is like purchase plus on steroids. Purchase plus is
Oh,
more of a reimbursement program.
all right.
This
There we
program is like you mentioned earlier, is a way to get that financing up front.
Perfect. Yeah, I like it even more. So you don't want to miss this one. February 19th, 6 p.m. We'll see you there.